Good evening, good evening. Welcome to the live Facebook tonight. That's right, this is Wednesday and the last month of May 2023. I hope I find you well and good. So let's get started. Hope you have had your nice dinner in here. And also this week is going to be a very important week, especially for Trade VSA, as we will be one of the gold sponsors together with Macquarie in the Invest Fair 2023. It's one of the first events, at least for this year, that we will be appearing. So if you have time, do come over to the Mid Valley Exhibition Hall in Kuala Lumpur for this weekend, June 3rd and June 4th. So do drop by, and you can also go over to your Facebook, type up the Invest Fair and find more information. And there's a lot of great talks in there. I hope to see all of you in there. And if you do coming, some of you especially, I've been seeing your names in the Facebook in here, do drop by and give us a support and give us a shout. But tonight, definitely the talk belongs to the tech sectors, which is what I'll be talking about. And for many of you who've been coming to my live Facebook, and I do think that you could already see there is a trend in the every Wednesday night. And I do hope that some of the talk that I've done previously has beneficial to, and you have taken some action going forward in here. And again, this is a continued series of my live Facebook and how I see the market, especially in the tech sector right now for the stock market, where we will see a new high. You can also catch me and follow me on the TikTok handler trade_VSA for much today. So tonight, a little bit of sharing is why I believe the US tech has more room to go higher, and also review some of our past live Facebook discussion, which I do think that it does makes a lot of sense if you look back in the last 3 months, and why it's important right now to have a plan. Else, if you don't have a plan how to move forward, either your money got stuck in Malaysia or you're rewriting some of the technology stock, it's always good to know what is the next course of action in here. And I do hope that some of my points that I'll be discussing in tonight will help you to plan forward in there. And of course, through our flagship product, our Smart Robie, as well as our VSA 360, that will put you into the right position here. And also understanding why the KLSE are right even this evening when we close at 5:30, why did it go down so much when we can see the US market was actually rising in here? And where are the trading opportunity right now if we are talking about buying into dips, continuing where we left off with the setup that we talked about last week in here, and a little bit of summary and closing. So let's take a look on the about couple of weeks ago, many weeks ago, there was almost coming to 2 months on the 29th of March when I already start talking about investing in tech stock. That was during the banking crisis. Many of you may have remembered that, right? Remember the Silicon Valley fiasco and the collapse in here with the high interest rate. On hindsight, if you look back, what I said back on 29th of March does make sense in here about the investing market. At that time, market present itself in a form of Veggie. I think many of you have heard this word info. We have the Wall Street, we have Credit Suisse, also going being bought over by this company in here, UBS. That's right. And at the same time, we have the Russian-Ukraine war, which is still ongoing right now. At that time there was the winter, and we are coming to summer, and now the Ukraine start bombing. With the drone attack on the Moscow, how things has changed in here. And of course, if you are in the line of way, means you're always thinking about danger, then you would have stayed up. That's why I talk about having that plan is important. And if you plan through that, some of these things make very sense. Now, going back to that evening, which is looking at the first quarter 2023, the Nasdaq was doing around 13,000 in here, and of course plagued by slower growth and sales, and a lot of the pundit which you've been listening to, including myself in here, would tell you that the outlook for 2023 is going to be bad. You're going to have recession in here, the market's going to collapse. But guess and behold, the market actually went higher, and also the rising interest rate. But of course, if you have listened to some of my points that I talk about on the live Facebook, I've sort of shown you where the trend likely to be. And of course, at that time, all indicators that we present represented on the VSA 360, the Smart Robie, are pointing high upwards with the green pentagon in here, even despite what we've seen on the financial outlook. That's only on March, but now on May, which is coming to almost first half of the year, we have a pretty outlook in here. Now, of course, if you look in terms of comparing the tech stock and the banking sectors, people were looking for growth, okay, at the time. So of course, if you look in hindsight, the smart money probably knows something, and the market didn't drop, despite what we saw in the March. We have the banking crisis in here, and many people were also comparing 2008, the global financial crisis, and what we've seen in here. But I've said again, time and time again, it is a different picture in here. So that's why it's important that all of us, maybe some of you in here, had that information out front and really understanding what's really happened in here. Where is the growth, right? And of course, finally, just 2-3 days ago, we have this confirmation, which also have Apple came in and was confirmed pretty good growth in here, and also Microsoft. But the Nvidia is the one that really blow off this market in here. And something did happened last year, November, towards the end of November last year, is where we have the debut of the ChatGPT. Remember, ChatGPT came in November last year. It's only been the last 5 months, and how much it changed the internet landscape by the generative AI, and also, many of us are really surrounded by ChatGPT. And going forward, the impact of ChatGPT in terms of work productivity, in terms of employment, will yet to be felt. And now they are talking about whether the safety what AI is, but this is definitely has fueled the growth pretty much for 2023 from this second half year and pretty much off going to next year. So Nvidia really unveiled many AI products after that nice 26% jump in here, and that really sort of took everyone by surprise. If you look back on the announcement by Nvidia, right, where the quarterly earnings actually up 19%, because people wasn't expecting, but the smart money do know something. Remember, right, earlier in March, the market did not actually go lower. It actually built a very nice space in here, and then it turned green pentagon, and then finally the market broke up in here. So all being said is the generative AI does represent some sort of growth in here, and as such that market really go through this very beautiful cycle of pushing upwards as the infrastructure people were talking about this. Now from the same what I call the 19th of April that talk that I did way back then, and you could see Apple gone up by 5%, Tesla 12.2%, and those were the stocks I was talking about, and Microsoft on up 16 of April, because these are the same stocks I talk about every night in here. And I do hope that some of you may have some position in here, or you still have some of those Malaysian stocks that you generally cannot cut loss. I think it's time to move out, and hopefully some of the facts that are presented to you, as you can see, whether I'm right or wrong, if you can judge it from the old video in here, then you make a decision from what it is. But having said that, it's a very nice things to talk about periodically, going back to the last Facebook and the market gone up. So at the same time, day to day, we are bombarded with a lot of bear and your friends and your broker and your fund managers with all the negative news, depending where, even if you listen to BFM, there will probably be strings of bearish outlook, strings of bullish outlook, and this kind of, and one person really caught my eye is Jeremy Grantham, that he alert of a 50% market crash. And if you have done some really fact checking like I do with ChatGPT, another great benefit, you can see most of these fellas is only right 2 or 3 times over the last 20 years. That's right, over the last 20 years, they only write 3 times for the over the last. So actually, their rate, the corrective mode, the winning rates are very, very low. But yet, people take them very, very seriously. So on the 19th of April, which I did talk about those Tesla, Apple, right in here, where I said that be careful when you're listening to famous guru. I'm not famous yet, okay? So no one listen to me. So that's why I'm trying very hard to present those facts, and for especially those of you who are learning about the smart money, the VSA, and the green pentagon. Hopefully you have that behind you and able to push forward in here. And also I want many of you to stay alert, even things that I talk about day to day about the market doom and gloom in here. These are all what we call clickbait, because they just wanted your attention in here without giving the real facts. And they always quote when they were right, maybe 2008, the global financial crisis in here, especially many of those in here, right? So be careful who you listen. Now, at the same time, on the 19th of April, I talk about the Bursa technology was really worse off even compared to NASDAQ. This was where the market is. Right? You can see financial and Bursa are moving in a downwards trajectory. Now, right now, you could see this may change. Okay, this may change from the 19th of April right now to 31st of May. The NASDAQ versus the KLSE versus the Bursa technology. Why I bring this attention to you? Because many of our Malaysian players like yourself are still pretty much interested in the Bursa technology. You know, those are things. So what has become, you can see 19th of April, the market actually broke lower technology, and this is also one of the typical signature of smart money to chuchi wash. You have seen Inari broke down more, right? But yet at the same time, you could see Broadcom and Apple gone high. It doesn't really make sense. Only the last 2 days, when Broadcom signed the deal with Apple, and then Inari started to move up, and then everything started to move up. So this is where we start to see the KLCI and Bursa went tangent, means they are no longer listening already. And this could be a new trend going forward. So for many of our members, those who are listening, there may be a tangent where Bursa may continue to go down, but Bursa technology, which means the Malaysian tech sector may go up. Why is that? Because if you look back on the orange one up here, right, this is where NASDAQ has gone up 8.5% since the 19th of April in here. So this is where I do believe Bursa Tech will diverge away from the KLCI to move higher. And this is no surprise if you've been using the green pentagon from our VSA 360, you probably notice this very same observation in here. Now let's take a look at the Wall Street after the backdrop that we've seen on NVIDIA, explosive 19% growth in here. What's really happening now in here? And this is again depending which time of the day or the period in here, definitely the interest rate. The interest rate is likely to see a little bit of pause because we have the banking crisis in here, and also at the same time we have the inflation rate started to come down. So that pause interest rate, or the likelihood of pause interest, even cutting that interest rate, is what is fueling this spectacular growth in the technology stock that we're seeing right now. Maybe not so much for Malaysia, because we did have that 25 basis point move in the market, and that's why, you know, the technology stock actually went further down before it cuts back up. Maybe at this point they realized that Bank Negara may make a mistake, which I did talk about on the TikTok, that raising interest rate in the Malaysian sense does more danger to people like me who have savings as well as have a mortgage payment. We have this kind of commitment now, we have to end up paying more. So raising interest rate in the Malaysian context doesn't really make sense, you know, because the inflation in Malaysia, like it or not, are pretty much in control because we have subsidy in petrol, right? So we have subsidy in petrol. That is one of the biggest inflation that we have seen so far in here. That's going to be pretty much well controlled in terms of our cost. If what I say here makes sense, give me a thumbs up right here and here. So then going back to 22nd of February, when I first mentioned about the rise of the AI, when the ChatGPT came out, remember, right? I said ChatGPT came out in November, then we saw this market rebounding. So on the 22nd of February, I already start talking about the rise of AI. Only finally confirmed, right? Because if you look at the chart, we already know this is already ongoing. And there were 4 stocks I have talked about in here, right? And NVIDIA, ASML, those are the one who make the 5 micron and soon 3 micron machine that is used at TSMC, and then Intel and AMD. That was already in February time frame in here. If not, go back and check out what are the things I've talked about. This same slide that I put out in here. So lo and behold, from the 22nd of February and right until now, you could see NVIDIA, on hindsight, you know, banking on that, it's up 97%. ASML, which is the maker make up about 16%. They didn't go down a lot, having said that, ASML being a Dutch company in here, and this is one of the company where they restrict the export their machine to China, right? And because of that restriction in here, they couldn't do much sales in here, so that's why, you know, this stock couldn't go up. But AMD certainly did perform well from the 22nd of February. It's up 62% in here. So the question mark is going to be, Martin, the market already gone up so high, can still go up or not? I think that is question remain will be answered in a later slide, but it's best that you tell me what you think in here. After all, we always want to talk about my talk being an educational standpoint where you really want to open up your mind, right? We don't need to be close, we do not need to be told, but we need to be shown those facts and get those in the proof that we see in our charts, using the green pentagon, using the smart Robie apps in here to really book and buy those shares in here. So what does it mean also for the S&P 500 to move higher in here? Now if you look back, I've shown you every time when we have two successive pullback, like two dips, right, where we seen in August, and we did see the dips also but since May has really turned positive. We have two in here. Last week we have minus 0.4, but it does look like May has turned into a positive time frame in here, but June will probably be too. So if you look back, why I'm pretty positive that the S&P 500 is S&P 500, like it or not, if you've seen some of my earlier talk, even go back, as I said before, the characteristic and the seasonality of the S&P 500 is that every down year that you get, the market rebound back very strongly. You can see back 2018 where they have the during the President Trump year, they have the what we call the trade war with China, and that's affected the market was down minus 5%. But you notice 2019 the market came back very, very strong with 26, and 2022 it was down 19%. So being a far-fetched loss on 19%. So I do expect 2023. Let me just move out of the way here. Yep, you can see up here. Now this up here, yep, that's right here. It's not going to be 8%. I tell you, it's going to be more. So again, I'm going to be showing you at the end of the year if I get it right and what are those figures in here, especially the VOO, which is the S&P ETF in here. Now this all points back to why the market is moving up in here. Let me remind you that is because the inflation rate in US is coming down. So we got probably a week more, then we'll see the May 2023 inflation rate, and again that will be the talk of the town, because right now tonight they'll be talking about the US debt ceiling, whether they can pass it through in the Senate as well on the House Congress in here, and once it passes, then the market will start to move up. That's why tonight you won't see this market moving up. But lo and behold, if you look back in any past of the so-called US debt ceiling in here, it usually is a done deal. All right, no problem, market's going to go up high. So this does represent an opportunity for you to buy on a pullback. And again, I did talk about fractional investing, where you can buy maybe 10 ringgit, Malaysia 10 ringgit of 0.01 share of Apple, and just try it out in there, right? Of course, you need to check whether they are Sharia compliant or not, so something that you want to keep neck with it. Now, I want to draw your attention now why the KLCI fell as much as we've seen, and one of the real reason is one of Malaysia's largest trading partner, which is China in here. Now, if you go back, ever since we have even going back to 2019, and then the pre-COVID and during the COVID, Malaysia has been very dependent on China, mainly being really an export. We export a lot of the products to China, and China, we buy a lot of things from China in here, being palm oil, and then we have the also engineering chips, things like that, machineries that we have, right? So the China GDP is very, very closely correlated to the Malaysian GDP. So just like what they say, when the big brother sneezes, hachi, the little brother, that's Malaysia lah, we catch a cold. All right, so that's the kind of scenario that we are painting in here, and you will also observe right now the ringgit is 4.65, 4.6, and every time when I look at the newspaper, they will tell you all kinds of reasons why our market is down, and many reasons they say, but they never talk about the China one. And if you look back, this is one and only reason why we are very, very strongly correlated to the Chinese GDP in here. And they don't like to say it out in here because it's very easy to read the Malaysian market where we are with the currency in here. All you got to do is just look at the China market in here. Now, if you look back, this is something I flashed last week on this column here. All right, this column, that's right. This column is the first quarter 2020. You can see the market really fell off the chart, just like what I've shared with you previously in here. This was because the slowdown that we see in China used to be like we're talking about 8-10% GDP growth. That has really slowed down a lot. You can see the GDP growth for first quarter 2020 is about 5.6 in here. Everything has come down from agriculture, mining, manufacturing, construction, services, private consumption. Semua turun. All right, semua turun. That's why the market is affected because of this, and that's why it's closely packed, right? So even this evening we have the sell-off that we see in Hang Seng, almost 2% down, and then Bloomberg came out with a great article just a couple of hours ago in here. Everything you look in China is a sign of more market misery. What do you think? Do you agree with me on that? If you do, just give me a thumbs up. So I want to give you a heads up what it's likely to be. I still know that many of our members are still bullish on the Chinese with the export. You know, they're still remembering the 2013 where China boom. But again, many of my live Facebook, I talk about, if you look from a chart, right? Remember, a chart don't lie, people lie, right? So whatever I present, I always try to present from a chart basis when you look at it, because many of these things that you see up here can be opinion pieces. So charts is very important. Of course, we do talk about the manufacturing data are really slowing down and so on and so forth. And of course, the China-US tension, the chip war, the Taiwan invasion, and even today, I think there was two fighter jet, American fighter jet and a Chinese fighter jet in here, you know, and then the US want to invite the Chinese for talk. The Chinese don't want to play hard to get. So this kind of thing is really, really causing why we see the market it is. But more importantly, we want to look from the technical indicators where we've seen Hang Seng right now. So if you look, this is from Bloomberg. Hang Seng has moved into a bear market territory. What does it mean? I'm going to show you the next slide. It is. So from the top, where we saw the January rally, where we thought that, you know, presidency is going to have a control, is going to do something for the China market in here. But lo and behold, he's gone back to himself. He want to show that he is the Taiko and want to sort of fight with the rest of the world, especially the NATO and in here, and gang together with Russian in here. And you can see this market really took that big fall, moving into the bear market territory, which is actually a minus 20%. So keep in mind, when you ever see minus 20%, this is where the market really fell off the ground. And of course, at the same time, just like KLCI, KLCI rely on foreign funds, right? We rely on foreign funds. So if you look back in the month of May at the 31st, the Chinese market, a lot of them are selling the A shares. A shares, almost 9 billion shares are leaving. So just like Malaysia, which I've talked about every morning in the breakfast show and also in the podcast of the Telegram chat. Whenever you see a lot of foreign funds flow out, this is where you're going to see that stock's going to tank. And you can see right now, last year when the Chinese really gone down. If you look back China, right, you can see here October, November, right? That's where the market bottomed. So right now you can see October, November, that's where the biggest, remember this was a big outflow, which is minus 80 billion. Today ni minus 9 billion, no. Belum datang lagi, no. You see what I mean? If you understand what I'm saying, give me a thumbs up. So where it simply says that we are seeing only some outflow, minus 9 billion. So if that market were to go down some more, okay, this is where we will see a lot more outflow in here. This is the beginning of more downfall that is China is coming, unless they do something to the economy to stimulate, like cutting interest rate or cut the what we call the SRR in the banking sector, which actually pump more liquidity into it. But at the same time, you also notice the Chinese yuan used to be controlled by the POOC now has moved to 7.1, because they need to control it between 6.6 Chinese yuan to a US dollar to 6.9. But because of a lot of foreign fund outflows in here that we're seeing, it had breached to the 7.1. So this thing about, POC, where we talk about de-dollarization, right, where China Chinese yuan seem to be strong. Now it's no longer talk already, because why? Chinese yuan has become weaker. Okay, so again you can see some of these may be a form of propaganda, how Chinese yuan want to replace the US dollar, but I can tell you it's far from over. The American don't need to do anything. The American need to do one thing only. They need to print money, and once they print that money, right, you can see, right, with the inflation being controlled, coming down, then you see a lot of people is going to be pumping money into the stock market, feeling that situation where the tech sectors right now, with the generative AI and accelerated computing that we see, the sales growth in Nvidia and a lot of chips, you see that stock's going to go up. And that's the scenario I'm trying to paint to you, which is not too difficult to understand, right? Am I correct? Not? So if you can, just give me a thumbs up what I've said in here. Now, next chart, if you look at here, this is where we see a very, very strong correlation when the HSCI is down, which is we've seen down. The HSI, which is the Hang Seng, is down 20%, which is the Hong Kong share in here. So you can see the KLCI also follow, right? Even today, I look at it, Public Bank, which have nothing much to do with Hong Kong, except they maybe have a Hong Kong, it's also down. So foreign funds are really selling them, what you see here. So this is where you see Hong Kong is down, Shanghai, the Shanghai index is down, but one thing which is really buckling is the Nasdaq. Nasdaq continue to go up in here. So I do expect when Hang Seng and Shanghai is in what we call a stage 4 markdown, the KLCI soon is going to go down. So I have informed you, you guys already know where the KLCI is heading. They're going to be heading more downwards in here, right? Which I don't really expect it, but until when I see how much of our economy is packed, and now there is really a divergence where KLCI used to follow Nasdaq, but no longer. Since I think January or February, it's sort of unpacked, it follow China. I don't know why. Is it because a lot of the foreign funds are bought by the Chinese? All right, or the used to be they're bought by the more so-called Western counterpart, maybe like the Americans or the Euro who buy our foreign fund. Maybe right now it's the Chinese buying our foreign fund in here. All right, so this is what we are seeing right now. Now, if you look back on the Chinese yuan versus the ringgit in here, you can see, right, even Singapore, right, also have the largest trading partner with China. They are not so badly affected when you see the Chinese. Now, this is the Chinese yuan you can see here, right? So when the China broke through the 7.1, and I put it the Chinese yuan versus US dollar in here, you could see, right, very purely when the Chinese yuan go down against the US dollar, our ringgit so follow. Got nothing to do with how strong our economy is. It's just that the GDP growth summa follow. So this is where again I talk about when the big brother, in this case Chinese, the Chinese yuan sneezes, the little brother Malaysia catch a cold in here. So to know where the KLCI hit there, just simply look at HSI. Now of course tomorrow when HSI go up, right, let's say 2%, our KLCI may go up 2%, right, but depending whether the foreign funds will come in here. So this is the question remain, because the Hang Seng Index HSI has already gone through a bear territory, right, minus 20% in here. Then the question, will Malaysia go through that territory? So let's take a look at the chart that we see right now in here. You can definitely see since the red pentagon, the market broke through. And I talked about the big support at 1400, but looks like it's going to be breaking. Why? The Hang Seng market already broke through. You can see from the top up there, the minus 20% has actually been broken and the market continued to go down, whereas our KLCI is only minus 8%. Last time our market went down was almost close to about 11%. So we may go down another 3% from where we are, so another 50 points to go down some more, right? So that tells you, but the technology stock may rebound back because many of the technology stocks are no longer in the KLCI component. So that's really a positive thing in here. All right, so keep this in mind. So in the longer term, when you compare S&P 500, KLCI and Hang Seng, where would you put your money, right? So if you look back this is from the trading view here. If you look back today, Hang Seng is down almost 2%, KLCI is down 1%, but S&P hasn't opened yet. We have to see tonight what's happening. But if you look back in terms of year to date, Hang Seng is down 6%, KLCI is down 7%. But S&P is up 9%. All right. Now, very important, if you look back 1 year and you look back 5 year. 5 year Hang Seng is down 40%. Lost money lah. Sakit hati. Last 5 year KLCI 21%. Right. S&P 500 55%. So on average, you're getting a 10% here. But all-time high was 93,000% in here. Now, if you look back, this is the Hang Seng. It did hit a high at 32,000. The last time it did was just before the Beijing Olympics in here. That was the old high, but since then the market was still trending up. But what are significant, if I make an observation, was 2018, 2019. You have the umbrella movement, right, where the Chinese government presidency came in and clamped down on freedom of expression. Where you saw the umbrella, and right now everybody, those who went against the government, all go to jail. All right, we saw the Apple, Jimmy Lai all gone to jail, and that was really the year I was in Hong Kong. I remember that was the year where the market hit high 2000. But since then the market sort of moved sideways, and then finally this year around, I think just after COVID, right, the market hits and then all the way down, and this is also aligned with the Beijing coming out usually with a higher GDP figure, right? Because one of the reasons why when Chinese come out with their forecast GDP, they have to plan their so-called employment as well as budget for the local expenditure for the different province in here. But right now they plan a lower GDP growth, which means they are really struggling with the huge amount of debt and the huge unemployment and also declining birth rate. So China is actually in trouble to be. I'm not saying that US is not, but US is slightly in a better way to manage in here, because after this round, if the US don't do well, they may just unelect President Biden. But for the Chinese government, you still have this guy, President Xi, out there. So that's really the danger point in here. And pretty much you can look at the stage 4 for the KLCI. Again, if you look back the last 1982, we are still in the same downtrend that we've seen here. Again, after hitting that high 2018. Of course, 2019 was Najib was the prime minister in here. That was the best go-go days before 2013, before government was printing money, was spending, you get the 1 dB, and since then our market is ringing up. So right now, even with Anwar being the prime minister continuing for another term, I don't see any positive coming out from the KLCI in here, right? Because one thing for sure, we are still pegged to the Chinese government in here, and every time that the Chinese GDP go down, we're going to be going down for the time being in here. So where is the opportunity now? If according to opportunity, where you're looking for opportunity, and I hope that many of you here share the same kind of thought process that I have. And Tom Lee, a fund manager in France, which I've been following, and he's the opportunity guy, right? You can see it from the Wei Ji. Wei is where the danger is. If you see danger, then you probably put your money under your pillow, or you're going to put it in fixed deposit. But of course, the inflation is going to eat you up in here. So he's going to be telling you where the opportunity are. Now, of course, I'm not going to tell you where it is. You can see from here the opportunity, right? Just let me just bring this up again so you can see my PowerPoint, right? And you can see from here, you can see from here, everything is green. That's maybe it's just classic. So right now the S&P 500 is pulling back to retest back the old high at 4,200. It went up a high about 4,600. And one of the reasons why you see they are able to continue to do high, partly because they are printing money in here, the quantitative easing, they are still doing that. And how do we know that? Look at the debts, right? Look at the US debt ceiling. Every 2 or 3 years, the ceiling cannot hit one, and then they have to discuss, we cannot raise interest. They're going to print money and then they hit the ceiling again. But also from the growth in terms of the sector, in terms, in this case we call innovation. Remember the generative AI, the ChatGPT, those are creating new growth, and that's why Nvidia came out and confirmed that 19% growth in revenue. And that's why we see S&P 500 being a very innovative country continue to generate good EPS, good earnings, and that's why we can see the market going up. Now, according to fund strat, so then the question always remains: if it's so high, can still buy or not? Right? Just like I've been telling people, like Apple, right? Why Apple, when you buy 2 years ago, now it's higher? Right? Maybe in 2021, 2022, it went down lower. Why? Is because the growth in the earnings, the growth in the revenue. And the same thing goes for US. US will continue to grow because they are one of the best innovators in here. Put this in your mind, okay? You must put this. Don't look at it technically, because sometimes we tend to silo ourselves in the hole all right, or the friends and the people we mix with, they're going to tell you, wow, so high you want to buy, all right? So we also need to look at valuation in here, but also look at the fundamental things behind it. And I do hope that some of my teaching does, flow to you, and then you understand some of these things that I've talked about, all right? So fund manager Tom Lee said that if and should the S&P 500 broke through the 4,200, right, then you will see a lot of buying on dip, which means the market continue to go up on the S&P 500. But now it's almost there, 4,109. Once it start to break, you'll see every pullback will be an opportunity for you to buy. But at the same time, remember, the stock market always go up on what we call a wall of worry. You see, wall of worry means there continue a lot of bad news in here. All right, so don't miss the boat. What we are trying to do, we want to buy a really nice uptrend in here, and the key thing is to ride on these tech sectors, right? So what we want to do is recommend you to use the VSA 360 on NASDAQ, and if you have not used it in here, check out our 10-day free trial. You can contact on our website in here and you get hold of this. And if you want to use the 18-day line change here, I'm going to share with you how we do this. And you go to VSA 360 and you go to screener, and then you go on to 18-day line change. All right, so once you get here, you switch over to NASDAQ, right? And okay, because it's 30th, so we're going to switch back to 30th in. Okay, so from here onwards, and do take note, every time when you see purple here, that means it's a nice up momentum. LT means it is above the long-term moving average. So we want to sort of screen through that, make sure all of them are above long-term moving average, but we don't want to pick purple. We want to pick purple and green. So the shorter term one, green means is bullish but not overly bullish. Remember, purple is overly bullish and short term is overly bullish. So what you want to pick up is those that is so-called green here. You can see trade desk, and we want to pick up those technology ones, semiconductors. This one is very bullish here. And this is where we can find Apple. All right, interesting enough, we find hardware, we found Cogen, and this is $177, $55 in here. There's communication equipment. So this is where we're able to pick up some of these stocks that is purple. So purple, let's take a look at this one is $329, while this one is insurance broker. So we look for those technology. Apple is one, definitely for sure. So we can go on to Apple. Let's see, put AAPL. Okay, so this is Apple. So you can see Apple is a nice uptrend bullishness, right? You can see here, right? And this is where we want to have the continuation of an uptrend, right? This is where we will pick those up. So there's one Apple here. Then let's take a look what Connex, okay, electronic instrument in here. CGHR, you can also click this one here that takes you to this website, and you can also check out some of the fundamentals that we have here, right? Or you can just go on to, you can see here all time 15,000, right? And you can see 5-year 19% in here, 54 times. What do they do? Electronic. So you can find out more about these company in here, and before you switch over to your super charts, which is what we are seeing here. Right, CGNX, and this is where we are. You can see right now we have a pullback. Okay, we have a pullback in here. This is still in a nice uptrend, but it's still in a pullback, and we want to wait for convincing like sign or strength, sign weakness before you take up. And this is buying a trend up. That's why we have this 18-day line change. And if you don't like it, you can actually buy on the so-called Pentagon guider in here. But that gives you an opportunity. So next one, we can look at communication, green. Okay, this one hasn't moved up yet. We can look at this one here, 329. ANSS. Okay, again ANSS, you click on that one, that will take you to understand. Wow, this one also 10,000 bit up, all time 10,000. 5 years is 100% in here. So that's why you don't need to necessarily buy Apple. Find out more about it. They do packaging software, engineering simulation software in here, and then you can see go to super charts, click on super charts very quickly. And that's why we really want you guys to try out our VSA 360. This is a nice one. It breaks up, it has a pullback, allows you to buy at the cheaper price. You don't want to be chasing this kind of stocks in here. You can see the trend is still suddenly up in here, right? There's one nice one here. Let's go back to this one, insurance broker, the one, Connex. Okay, and we go back to page 2. You can find another one, Trade Desk. Okay, Trade Desk is a application software, TDD. Okay, so you go to TDD and you can see, you can look at them, what they do. Oh, PE is 400 over times. To me, it's a bit pricey lah. This one, I may not like it, but I may just want to trade it. So I'll just go on to hit the super charts, and it's going to bring up in here. And you can actually, yeah, that's the one. So this is where you can blow it up in here. Again, it's going up. It's a pullback because we have seen the market pullback. I think it's good to buy on the pullback and plan your trade. And it's broken up the old high in here. It's still in a nice uptrend, pretty much like Apple, right? As I said before, if you buy into the reason I just presented to you, then these are some of the stocks you want to be looking at. Okay, and if there are other options, if you want to buy some that is green, hasn't run yet, you can see semiconductors, AMBA. But this one shorter term has moved up. Shorter term has moved up. These will be also a very nice chart. Let me look at the, see this one 900%, 1 year is down. That's why you want to buy the purple first. The long term is purple. So you have a nice uptrend in here where the trend is trending up. This one looks like a Chinese company, low power chips. Okay, let's take a look at the super charts. Okay, let's look at the super chart here. And you can see, oh, you see the big drop. Right after the earnings in here came back down or up, surprise on the 26% here, but then the market pulled back a lot. You can see this is the problem with some of those unknown shares, right? You can see it went up and then heart attack went down 14% in here. So this is where again I wouldn't want to buy this share because it broke below the 200-day moving average in here. That's something I don't like. That's why I like to look at those so-called purple one. Purple one because I'm buying in a nice uptrend here. Let's take a look at this one. Hexa Healthcare. You got some of these are really purple one that already move out, but biotech I'll probably give it a miss. Or you can just go through this and click on it, look for technology. So technology, semiconductors, you can see Everspin purple. These are the one that so-called has really moved up a fair bit. 186 now. This one in here is what we call a penny stocks. Okay, a penny stocks. So penny stocks are very volatile. You can see 1 year up, 6 month up, 6 months. That's why you see it really different, right? All time is negative compared when you pick those purple one. You can see them all day. So these are more for really very quick trading one. So it depending on the time frame and hour frame that you have, some of these, but this one here nice pullback, and this one you can see this stocks here can move up very fast here. Pixel, this is about 7 points, have a pullback in here, but the setup is quite nice. I like this setup. Just cross the 200-day moving average in here. A lot of nice up room for this one here. Not too bad, this one, yeah, not too bad. So you just need to take a look at some of these green, purple, and Qualcomm is another one, semiconductors. So from here onwards, technology, you can go to number 7 here, and of course, this will be tonight's trading, you see, all right, like ever Pixel would. So that's really in very short. You want to use the VSA 360 and give it a try, and this is how you want to pick up those. But right now, I advocate for our members and those who pick the green ST and the purple long term, so you get that nice uptrend backed by the longer trend that is pushing up in here. I do hope that that will help you in here. And of course, for the longer term, we do have in our masterclass portfolio is our monthly rebalancing in here. We can see May 8th we got into Tesla, it's up 18%. Applied Magnetics up 7%. Hershey, the chocolate, was March. Of course, not all. Exxon has pulled back. And the petrol prices has come down here. April 4th, we also have Walt Disney. When Walt Disney came down, they have some streaming services, but right now it is on what we call a lawsuit against with the Florida government, Ron DeSantis, and that's why the stocks is taking a bang in here. But longer term, I do believe this Walt Disney is coming up, but it makes up for the losses that we've seen here. So longer terms, you can check out our masterclass portfolio, which I will be doing the rebalancing right now in here. All right, now this is a quick one where we do the VSA trading method, buying on dips. So you want to be on part of what we call a stage 2 markup, and that's why we choose the purple long term, where we go, but there is a pause in the middle, like what we see here. All right, and that's where we want able to buy in here. All right, strong insider buying, you can check it out, those of you who are using the VSA 360 for the local stocks in here. And you want to look for sign of strength after we see a series of sign of weakness, which means we have sign of weakness, the market will pull back and we see some spring in here, and that's what you want to be buying. Or you can buy at the beginning of the green pentagon in here, paying attention. Now, how long you want to hold it? Generally, you want to be doing around 5 to 8 weeks. Okay, 5 to 8 weeks, that's a holding period in here. And during the 5 to 8 weeks, if you get a nice double digit return, that's the one you want to be taking it in here. And usually the stocks may fall off a bit more, right? And then just sort of rotate out to another one. And if the stock doesn't go anywhere, and that's when you want to cut loss and move on to the next one in here. These are some of the local stocks. Definitely Inari is worth looking at, which I've talked about earlier on. So you can go back to here. Let me just close some of these one. Okay, and you can see here. Okay, so you can see Inari. That's the one I think. You can see like a nice pullback in here. So this is a good one. Even today, I didn't expect Inari to move up. But definitely tomorrow, depending how the market close, you'll see a bit of pullback in here. That does give you a nice opportunity for you to get into Inari. Check out Inari in here. That's a technology one stock. RC Cap also did pretty well in here. Nice uptrend. It has sort of paused beginning of a stage 2, and that's why you want to be in there too. All right, of course. On our latest smart Robie in here, for those who don't know, we have the Robie FA stock, very similar to the US. And Robie FA stock is actually buying those stocks with good fundamentals in here. So you can check out the ENPH. This is for tonight one. So let's take a look for this one here, ENPH. So first thing, you can look at end phase, and what do they do? Of course, right, you can always go to the trading view, click on look at financials. Right, this is a financial in here, and again you will see some of this company here. 48 times PE, a bit pricey, but take a look at the statistic. I'll check out the statistic and see here the return on equity is 75%, which means they have really strengthened in here. Quick ratio 3 times, no debts at all. See, long-term debt, no debt one. Whether they pay any dividend, okay, no dividend, no dividend payment in here. So you want to find out more about the company, you can click on here. Basically, they do a lot of micro converters, batteries, things like that, which is actually a climate change, the kind of stock prices in here. And it's moving up, actually. It's moving up in here. That you can see here, 17% net profit, and you look at the quarterly earnings in here, which is not difficult, something I've taught you guys on in here. You can see. So this is definitely to enhance the knowledge that you have with these stocks in here. ENPH. Okay, of course, Microsoft, Apple, Nvidia, those are the stocks you want to check out the setup in here, and you want to be buying during a pause in the trend as it started to trend up, as the market was started to move up some more in here. All right, definitely so how to buy on bad news? Generally, you need to do some research, just like looking at the financials I've talked about in here. Don't be overly emotion. Market may pull back a bit, and then you need to have a plan. I think that's very important. This way I've talked about when you have a plan and knowing those setup, what are the reward to risk, and this is where I will cut loss, this is where I will take profit in here. That's part and parcel of our education. That's also my senior coach Zach share with you on our Monday weekly training in here. That's where you want to participate and become part of our premium members, and take up our VSA 360 membership in here, where we also have the training to teach you all the aspect in here. And some of these stocks you can keep it for a slightly longer term. If you hit your target, you just move on in here, and who knows, as I said before, the S&P 500 has some room to go up in here after a down year in 2020. This is definitely a good year. And of course, do drop by on the June. This weekend we'll be in Mid Valley in here, 10 to 9, your good self here, your good self here, and we'll be at booth 25. As you walk into exhibition hall, you'll probably see us right next to Macquarie in here. All right, so do come over, say hello, and we'll take some photos in here. That'll be great in here, and I'll be speaking at the 2 o'clock slot at the same time in here, so check me out. And don't forget, download Smart Robie, right, because this is where you want to take opportunity to use the US market. And those of you who want to also look at the SGX, but Hong Kong give you a miss first because can come down some more in here. Okay, So for summary in here, I do hope that some of you know the right strategy to buy on dips or buying on continuation of a stage 2 markup in here. For the Malaysian stocks, definitely support and resistance, and diversify of the US market, right? Start buying a little bit of technology stock, AI sectors in here, and more importantly, find out how the VSA timing work. Take up our 360 VSA 360 free trial 10 day if you have not done so in here, because we're going to teach you to be contrarian trader in here rather than follow a trend. So that's all I have for tonight. Thank you for coming, and don't forget to join our Telegram chat room for all information that you come. Okay. Yes, that's Amir. Good to see you again, Amir. All right. So I hope to see you guys. By the way, there won't be any breakfast show on Friday because we'll be going to Mid Valley to do the preparation to set up the booth for our weekend, which is the June 3rd and 4th. So take note, there won't be any breakfast show this coming Friday as I'll be there. And I do hope to see all of you in person. After all, COVID is finally over, and it's good time to be able to shake your hand and take a photo with all of you. You're being my greatest fans and my greatest audience. Thank you again. I'll see you later. Bye-bye.